She's Chief Economist at IDFC First Bank. Ms. Sengupta, thank you so much for your time to us this morning. Great data to end the year on as far as the Indian economy is concerned, isn't it? Is it showing inherent organic strength?
So it has a few transient factors also. You've got the working day impact. So we had more number of working days in November this year compared to last year because of the placement of Diwali. So Diwali this year fell in the middle of October. Last year it was towards the end of October. So you had loss of working days. So that does show up. So this explains why October was so weak and why November is so strong. Another factor is the fact that the GST cut had prompted the producers to run down their older inventories, which were at the pre-cut tax rates. And so now in the month of November, you see a pickup in production as producers basically restock inventory. So those are the two transient factors. But I would say if you look beyond the IIP, you look at other activity, for example, freight movement. You've seen a pickup in freight movement, ports, roads, railways. You look at other consumption indicators, passenger vehicle sales, two-wheeler sales, etc. There is a broadening of the recovery. So earlier the recovery in Q2 was concentrated in, let's say, just the rural side more. If you look at the high frequency, Q3 is showing both rural as well as urban consumption pickup. Even construction activity, which has been a pleasant surprise, has held up. This is despite the fact that overall government capex in H2 has been a bit softer because of the slowdown in capex by state governments. But we are seeing still construction activity, cement production, steel consumption that is actually holding up well. So I would say the breadth of the recovery is wider, and the sustainability, that will be a factor of wage growth. Rural wage growth has picked up thanks to the good monsoons. Urban, we are seeing the first signs Q2 where your urban wage growth had picked up. So that we are hopeful that it should be sustainable.
Gaura, good morning, Neeraj here. And all through the first couple of quarters when the GDP data showed very strong numbers, there was a sense of wow, that how is it that this has come about as well, right? Not that people doubt the numbers, just that it was amazing as to how India has grown the way it has. Does this IIP, albeit October wasn't strong, but the IIP number as it come in November and the high frequency indicators that you spoke about, lay the grounds for a fairly robust Q3 GDP number as well?
Yes, Q3 is going to be very strong. There are a combination of factors that are coming in. It's both transient as well as, I would say, policy related. The transient factor would be two. One is the deflator, the GDP deflator, which has been under focus because of the divergence that we are seeing between nominal growth and real. That becomes negative in Q3 because your WPI, which is majority of your deflator, has turned negative. So this is going to boost real growth rate numbers. The other thing is company margins will be better in Q3. Q2 margins had actually reduced. Though we saw good profit growth, that was really led by the revenue picking up in Q2, which is a good sign because in Q2 is one of the few quarters where profit growth of companies were led by, not by margins, but were led by sales growth. So in Q3, margins are supported. The input cost has come down further. Because of the GST cut, your net sales growth will be better. Urban plus rural will support the net sales growth of companies. So your profit growth will be strong. The other thing is the deflator growth will give you that push in real growth rate terms. So we easily see Q3 above the RBI estimate of 7%. On, I would say on the conservative side, it could be 7.5, if not higher.
Okay, so which is good news. Now, second question, Gaura, based on the IIP data plus the high frequency indicators that you spoke about and the research that you would be doing, the dipsticks that you would be doing, talking to people, etc. Where are the, I don't know if I can use the term green shoots, but where are these signs of very healthy, sustained pickup in economic activity? Which themes, which sectors, which pockets?
I think consumption would be the first leg. So the consumption has picked up from, if you look at the GDP numbers, and even if, let's say, you look at other high frequency, rural consumption has definitely picked up. We saw it becoming very broad based in Q2. It's sustaining into Q3. We've had the second consecutive year of good monsoons. Rural wage growth is are higher than inflation. So in real terms, it's growing. And you are seeing, for example, tractor sales, two-wheeler sales, the basically demand for jobs under NREGA, which is one of the main indicators for rural, that has been declining for the last couple of months, which is showing that people are finding employment elsewhere in rural areas. Then there is GST. The GST cut has come in Q3, and Q3 is when urban is showing some signs of pickup. So I would say the theme will be initially consumption led. Private capex, there are conditions are conducive. You have banks in a healthy state, you have corporate balance sheets in a healthy state, you have very high levels of capacity utilization of 75% for the last couple of quarters. Usually in the manufacturing sector, capacity utilization doesn't stay at 75% because generally the private capex responds when capacity utilization picks up. So this time private capex has been very, very tentative. We expect that once you have, let's say, Q3, Q4, when we go into FY27 and companies see that the recovery domestically is sustainable, then they'll start adding fresh capacities. But initial leg of the recovery will be consumption led. Private capex will take time, which should come about in FY27 once companies are certain that the recovery in domestic demand is better. On the external front, we do expect trade deal with the US, but even with the trade deal, global growth is expected to be softer. So the support from exports is not expected that much. So it'll be a domestic demand, consumption-led recovery. From the industrial side, we have our services has done much better. When urban consumption begins to pick up, services side will get a further, I would say, further boost.